We do. It's something that, given the demand that's coming out there, we wanted to make a product that's consistent with a lot of the past strategies available that is really focused on ESG. Of course, ESG stands for environmental, social, and governance, meaning corporate governance. These investment products are designed to help investors align their values with their portfolio holdings, so basically having their money invest for them and make an impact that they feel is desirable. Certainly part of the increased interest is coming this partly from millennials. It tends to be important to them, so it's growing up from that groundswell. But part of it too is a recognition that people don't have to sacrifice return in order to align their money with their values. In fact, through May of this year, so the first 5 months of the year, the Vanguard ESG US stock ETF had a year-to-date return that was actually better than the S&P 500. So it's something that you're not necessarily sacrificing your returns on that. Part of that comes from potentially which sectors they're exposed to. Some of it has to do as well, and strong corporate governance tends to result in good performance for companies. So it can be various reasons why that works. Well, WAM has created our own ESG strategy, very consistent with the past processes we've applied through our value or growth strategy. But instead of using ETFs like so many other managers do, which it's difficult to actually stick to a very tight ESG requirement with that strategy, we're able to do that. We choose 20 to 25 individual stocks out of a universe of around 1,500 stocks that have all cleared an ESG hurdle and have met specific screens, and we build a portfolio of those strategies. So we take kind of the best of our past practices and then combine that with a very specific selection strategy to build an ESG world and hopefully put a strategy together, a portfolio together that works for clients. The Wildermuth companies are known certainly for our focus on the endowment model and helping advisors and clients implement in their own portfolios. So the creation of the Wildermuth Endowment Fund was a continuation of that, but of course that has liquidity on a more limited basis. So what we wanted to do is make something available to advisors and clients that provided daily liquidity. So with this, it's something that has diversification investments into various asset classes, very, very similar to what a typical endowment would have, but they're securities that can be liquidated on a daily basis. The positive of that is, of course, liquidity. The negative of that is that it does have a higher correlation with traded equities. It just has to, because things move on a daily basis. But that's really what the genesis of that is, providing something that is a little bit different from some of the other things that are out there. Well, it's primarily for people who really want that strategy. They like the idea of that, but have a restriction or some limitation that makes it difficult for them to accept the restrictions of something other than daily liquidity. So that's the primary benefit of that. And again, it still provides you access to private equity, real estate, absolute return. But again, it's going to have a higher correlation with stocks, or at least we would expect it to. But it does give you that daily liquidity. Yeah, well, we've just transitioned to the Orion platform. Very excited about that. There's still some exciting projects that we're working on with Orion that will be launched this summer. So we've got a new proposal system that will be streamlining into the process of implementation and setting up new accounts. So we're, again, looking forward to that, making it easy for advisor offices. We're constantly improving our stock selection and portfolio management processes that hopefully translate into improved performance. And during these last several months of a lot of market volatility, we'll go back and analyze what worked and what might have been improved in one form or another, so we'll look at that. We're certainly always looking for new opportunities in the marketplace as well. We've been talking to different institutions, and they're asking for some different possibilities as well, so we continue to exploit potentially new offerings, new products and services for our clients. And then we'll continue to work very closely with our advisors. A lot of our ideas come from the needs of advisors and seeing where we can better help them serve their clients. So we'll continue to work with advisors and see where we can basically make their practices better.